In today's video, I want to go on a rant. I want to give you my opinion on the habit of watching financial news, financial YouTubers, and the stock price. What I'm seeing is that people are consuming this type of content daily, and in some cases, many times in a day. Now, as a value investor and not a day trader, I want to know, is this helpful? Does watching financial news, financial YouTubers, and stock prices daily, is it going to give me a net positive or a net negative in terms of my mind and my investment portfolio? Now, I think you know where I'm heading. It's going to be a resounding no. And in today's video, I want to show you two examples that reinforces my point. Recently, the overall market sentiment has changed from extremely bullish to now kind of bearish. And the reason being is that S&P 500 has dropped 20%. NASDAQ has dropped 30%. Some of the biggest companies out there, Meta down 50%, Amazon down 40%, Tesla down 40%, and Netflix down 70%. Now, what I've noticed is that financial YouTubers who were just analyzing these companies recently, and they were saying that how great these companies were, suddenly, not even after one quarter, has changed the tune on the business. Suddenly, these companies are crap. Now, I can think of two reasons why this type of thinking is really bad for your investment and your investment education. The first reason is they're reacting to short-term news and recent earnings report. Usually in such a short period, your business should not be changing. Yes, the market conditions can change. There's now a risk of inflation and a risk of increased interest rates. But the business fundamentals should not be changing in such a short period. The second reason is they're changing their opinion of a business due to price fluctuations. They're saying that a business is good when the price is high and a business is bad when the price is low. Now, if you follow this type of thinking, you are going to end up buying high and selling low. Now, the thing I'm most annoyed about is that people are watching this and learning bad habits. And the scariest thing that I've seen is that in the comment section of these videos, people are asking what to do next. Should they buy or sell? Now, here's my advice. Never buy and sell a stock based on a video that someone made. And this includes my videos. In March of this year, an analyst from JPMorgan downgraded a whole bunch of Chinese tech businesses to sell, calling them uninvestable for the next 6 to 12 months. Now, in May, only 2 months later, the same analyst from JPMorgan has now upgraded these tech businesses to a buy. And they also issued a statement saying that their previous report for calling Chinese businesses uninvestable was an editorial error. Now, this is extremely irresponsible behavior. Let me show you how much this editorial error could have cost you. If you followed this analyst and sold out in March and brought back in May, if this was Alibaba, you would have sold at the bottom and missed out on a 30% gain. This is a perfect example showing you how ridiculous financial news and financial analysts can be. And if you start following them blindly, you can lose a lot of money. I think at its best, you can learn a lot about businesses and financial markets by watching financial news, financial YouTubers, and the stock price. But I think at its worst, it can be very unhealthy. It could make you an emotional investor. You can start to buy a stock because you have a fear of missing out. Or you might sell a stock because everyone is panicking. People will continue having opinions on businesses and the stock market. They're going to panic when it's bearish, and they're going to be over exuberant in a bullish market. We can't control that. What we can control are the opinions that we listen to. We need to adjust our own filtering. And Nick Sleep talks about the need to filter out information that has a quick sell by date, because next quarter's earnings are worthless after the next quarter. Instead, we should be focusing on the business fundamentals because they have the longest shelf life. Philtown focuses on the 4 M's of a business: meaning, moat, management, and margin of safety. I've actually made a video showing you how to calculate the intrinsic value and the margin of safety of a business using Philtown's method. If you haven't watched that video, you can click on the link above. Anyway, in my future videos, I'll show you the other 3 M's. I hope you got some good value out of this video. You can help me out by liking this video and also subscribing to my channel. Have a good week, and I'll see you in the next video.